Another Wednesday.
Another water cooler Wednesday, not just Wednesday.
Oh boy. I am so
Hey,
glad to be
Dion.
here.
Hey,
Hey,
girl. Hey.
hey. That weather out there is ridiculous. I hope whoever is out there is okay because it was really pouring down. It seems like it's kind of, I guess it's moving now, so through different neighborhoods, but
Yeah.
definitely wonderful weather.
I know, right?
Well, so part two, part two,
Part two. Here we go.
right? So last week we talked about loans and making sure you have the right amount of money and making sure that you're aware of what it costs. It is to
Hmm.
the money that you need to bring to closing.
Yep.
So this week we want to do part two, right? And take them to where after are we going to the closing? We're
Yep.
preparing for closing today.
Mhm. Yep. So what we're going to do today was going to go over those documents that people see, the one that they see when they get their initial disclosure package, and then also the one that they see at the closing table.
All right.
We'll
So
look at both today.
my name is Dion Branch and I am with EXP Realty. And we have with me with me, I stopped
We get
pointing.
every week we get this wrong.
Right, I stopped pointing and I'm like, oh well. So with me
Right.
I have Lisa.
House money mama in the hizzy. How y'all doing? I'm with Nexa Mortgage, where brokers are better. We're helping tons of people across the whole United States become homeowners. And we help you investors too. Pick up your properties, finance them, Airbnb, all that good stuff. We're doing all of that. We
Right.
just helping some of everybody.
Right. So we're here. We want to make sure that the whole purpose of us being here every week is make sure that we inform you all on everything you need to know about the home buying process and see if we could make sure that you are well informed when you go through your purchase. You know, either it be next month or years to come. So
Yeah,
we're
or
here.
next
We're
year.
here. All right,
Awesome.
Lisa.
So let's just kind of pick up. I want to do a slight recap. Actually, you know what? I had something that I just thought people might feel see as interesting and maybe want to kind of be on the lookout for. So I got a notification that the Federal Trade Commission is actually suing Walmart for money transfer fraud. It
Oh,
says
really?
on June 28th, the FTC sued Walmart for allowing its money transfer services to be used by fraudsters who swindle consumers out of hundreds of millions of dollars. In the lawsuit, the FTC alleges that the company turned a blind eye while scammers took advantage of its failure to properly secure the money transfer services offered at the Walmart stores. The FTC is asking the court to order Walmart to return money to consumers and to impose civil penalties for Walmart's violations.
Wow.
So, yeah, they ain't playing with them.
Yeah. I think we got some other news too, though, today.
What other news we get today?
The federal government has increased the rate again.
About what,
Point,
like about maybe 50 basis points, something like
yeah, it's like
that.
0.7. So,
Hmm. Yeah. Well, we told you it's gonna go up, but we don't have to keep talking about it.
right. But I think the reason why we're letting you know is because we want to make
Mm.
sure you're informed
Yeah.
and that don't be afraid of it, right? Because the
Right.
thing is that we're still below the norm. The
Yep.
norm wasn't that 2%, 3%, that we were experiencing last year. The norm is around
Right.
this rate. And
Right.
so this is
We
the
we
norm.
getting about back where we were. So I would say probably now we're just about to where we were before. So yep, but I mean there is a difference though because housing housing values are higher too. So that is making a difference for people. And I actually got a text message not too long ago from one of our customers who we helped to buy a home that his property taxes are going up now. He hasn't
Yes,
been in the home that long.
I got that test too.
You did? Okay. So that's something to be mindful of. And actually, if you're really thinking about buying, and if you're able, then probably now is a good time,
Yeah.
because when December comes, I think that'll be the next meeting. When December comes, there will be another increase.
hmm
We
One
already
thing,
know it.
right? One thing also, just for people that are thinking about selling their home.
Yeah.
So, last year we were talking about we could sell your home within a week. There were lines of people. So it's still a
Mhm.
good time to sell your home because there's not a lot of property that's on the market right now. So there
Right.
are
Demand's
buyers
still
that
high.
right there are buyers that are looking for properties, but the expectation of you selling your home within a week is no longer there. So
Right.
it will take you a little longer. So, and as a buyer, it might take you a little longer to find something. But so there's two things: sellers take longer on the market, and you might have to actually decrease your price. So that's kind of part of the normalizing where the prices were a little higher, and
Yeah.
so we might have to might can start out at one price, but in order to get the house sold, house price might have to go down.
Yep.
So buyers, that's a good thing
That
because
is.
right. So
Buyers
now
like
right,
that.
although we know that the prices of homes are higher, they can't sell as fast as they used to. So your chances of you getting a deal, you getting a credit towards
Yes.
closing is kind of back on the table. And so
Right.
those are some of the things that's going to help us when Lisa give us all these numbers that she's going to talk about in a few. So
Speaking of all these numbers, so actually, can I share a screen? Let me see.
yes, you should be able to.
All right, hold on 1 second. I'm gonna try to then. Dun, da, da, da. I need to get some theme music. What do you think?
Yeah.
So let's just pick up from where we left off from last week. We don't want to revisit this, but this is what we talked about on last Wednesday. So we gave an example of a purchase price and the down payment and the earnest money. I just want to kind of highlight a couple of things that are good to remember. We do source funds. We have to know where money comes from in a mortgage transaction. So you want to keep that in mind throughout the entire transaction, whether it's money for your down payment, like your earnest money, whether it's money that you're bringing to closing, even the money for your appraisal. We're usually, especially for FHA, we are looking because we can include that as part of your minimum required investment funds. So we'll usually ask to show that the money for the appraisal came through your bank account. So we know it's already paid and was paid by you. But we do source funds. We don't do matches money anymore. We talked about that a little bit last week, that's not something that we're able to do. So, for example, that going to the currency exchange with cash in your hand and getting a money order, we can't tell where that cash came from. That's why you have to take the money out of your actual deposit account with Chase, PNC, Bank of America, whoever it is you bank with, and get it from there, and then use
Mhm.
that certified funds like a cashier's check or something that you bring to the closing table, or at the time when you put down your earnest money, then you use your earnest, do that with your earnest money. So what we ended up on last week was we started to talk about cash to close. So that's what we're going to break down today. So this is a sample. It's probably not the greatest one. I don't know if I can make it bigger. Let me see. See if that'll make it a little bit better for you
Yeah,
guys.
that's better.
All right. So this is actually something you guys can actually find these on the web. So if you went to like the CFPB site, Consumer Financial Protection Bureau, or if you just did a Google search for loan estimate, mortgage loan estimate, or something like that, example, then you can find this exact same thing. So I'm using the very same thing that you can actually find. This is not a person. This is just something that's an example for us to be able to use. Obviously, it's got some general information on it, seeing this here. Excuse me. And then it comes down to the more specific stuff, your property address, sales price. Then it tells you the loan amount. So in this example is a little different than what we used last week as far as numbers, but the concept is still going to be the same. So we're going to use a loan amount of 162,000. The interest rate on this is 3.875. Obviously, that's not from 2022. That shows you the breakdown of principal and interest. If it's a prepayment penalty, this on my loans will always say no. I do not have prepayment penalties. So you will not see a yes in this box for me. Balloon payment, same thing. No, I don't do loans with balloon payments either. But it breaks down and this is something everybody gets when you buy your house. So there's no gray areas. You just have to know what to look for and what you're looking at. It breaks down your principal and interest. This is how much it costs. This is probably a conventional loan because, as you can see, these two numbers are the same, 761.78. It doesn't change. I wish they had an FHA example. I would love that. So an FHA example actually, excuse me. Oh, no, wait. Yeah. So FHA example actually would probably show you, well, it does. Here we go. Mortgage insurance. So here you got the mortgage insurance for $82. I'm sorry about that. But then it's estimated that that would go away after a certain amount of time. Like with FHA, it's 10 years. So it'd be year 1 through 10 on that instead of 1 through 7. But the mortgage insurance has to be on for at least 10 years, and then it can drop off after that. So a conventional, this is a conventional one. So it's showing the mortgage insurance, and then after we get to year 8, that's when they estimate that you would be about 20% of equity into your house, and so that you shouldn't need to pay mortgage insurance anymore. Just a little heads up on that. Don't just take it for granted that it's going to automatically drop off, because of course, if you continue to pay it and the bank doesn't catch it, then whose fault is that really? It's kind of I don't know if I'd say fault, but responsibility. It more falls on you than it does on the bank, because they don't mind you continuing to pay the money, but you should have a problem with it paying money that you don't need to. So just kind of
when this says principal and interest, what is that? That's just your payment.
That's just the amount of money that we loaned you as the lender, and the interest, the 3.875, that we are charging for that money. That's all that is. So that just, because this is a fixed rate loan, so that does not change. If this is an ARM or something like that, then you may see, projected changes between these years. But this is a fixed rate loan, which again, that's what I normally put people into, a fixed rate loan. So these numbers will stay the same. But these numbers can change because it only says mortgage insurance here, but that's still the same thing. It's the PMI. Essentially, that's what it is. So that can, come off once you get 20% of equity in your home, like you're the 80% LTV. Really, they say 78, but it's an estimate. So once you're 78% LTV, let's just say, then the mortgage insurance doesn't need to be there anymore. So that's why you see on here, the mortgage actually goes down and it's less per month starting year 8. Here it was $1,050, the $82 came off. So now starting year 8, the mortgage actually is $968 instead. Now the escrow, we talked about that, maybe not so much last week, but we just said you do have to fund the escrow account. But the escrow basically is that account where they put aside the insurance and the property taxes, because we pay those for you out of the account. So as you can see here, there's no way for us to estimate, what Cook County is going to charge for the taxes. So they kept those two numbers the same. That makes sense so far?
Sure.
Okay, cool. If you get it, then I'm sure they get it too. So this is a total estimate of closing costs. And then this is the number that everybody always wants to know, that cash to close. What do I need to actually bring to closing? So let's go to the next page and we're going to do a breakdown of that. So now keep in mind a couple of things. This right now is the loan estimate. So this is actually the document that you're going to get at the very beginning of the loan, at the time when I send out the initial package of disclosures, this is the document that's going to be in there because this is the loan estimate. So some of these numbers are going to change. And that's one of the things that I typically tell people. Like, for example, we're going to show here, well, this, I don't know who this is. We don't do an application fee. So I don't know where that came from, but somebody paid an application fee of this example. Loan amount points, these, they usually call them discount points. And what that means is that this is something that's being paid in order to get the rate that they got. So the rate was the 3.875. In order to get that rate, they had to pay a small amount of 0.25 or $405. Okay. Here, these are some of the things that are usually not going to be on your final. I'm going to show you a CD, a closing disclosure as well before we get off today. And you'll see that these fees are actually not on at closing because of the fact that they actually get paid during the transaction. We talked about appraisals before, and of course the appraiser is a third-party vendor. So with them being a third-party vendor, that means that they get paid their money up front. Like me, Dion, we're salespeople. So we get paid once the transaction comes to a completion. So once it consummates and all of the disclosures and all of the documents and everything is signed and money has exchanged hands, the loan has funded, that's when we get paid. That's when she and I get paid. But appraisers, home inspectors, people like that, they get paid during the transaction. So this appraisal fee will be gone. It won't be on there. It'll be paid outside of closing. And then
see if you can expand your screen just a little bit more.
Expand it.
Yeah, so it's a little blurry. That's all.
I think if I make it bigger, it's actually going to get more blurry.
Oh, okay. All right.
That's what I think. I can try it. Let's see. How is that?
It's fine. It's okay. Yeah.
All right, let me go back up. All right, so the appraisal fee, the 405. Normally, because I'm a broker, I charge a credit report fee right up front. So yeah, it says $30 on here, but when we get to closing, you won't see that because I would have already charged you for your credit report up front. So that fee is already taken care of. Then these other fees are really things that are charged by the title company. The flood determination fee, they have to make sure you're not in the flood zone. Tax monitoring fee, tax status research, like these are all like kind of researching type things that the title company does to make sure there's not an issue with the taxes on the property or any encumbrances on the property. Sometimes you could have where people say, for example, maybe they were there, they had some work done on the house, they didn't pay for it, and so now you have a contractor who put a lien on the house. The title company actually does like a title search. And so they want to make sure that there are no encumbrances or anything like that that are on the title for the home. They want it to be free and, clear of any errors, any additional liens, all that needs to be free and open. So these are all things that they charge for. Settlement agent fee, title search, blah, 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 blah. All right, let's go back up here. All right, now these are more like the government type stuff. So they do charge a fee for recording. This obviously was not in Crook County because if it was, we'd probably see about a $3,000 fee right here because they do charge for transfer stamps, and transfer stamps, from what I've seen, typically cost about $2,300 to maybe $3,500. And then these are the items that people are going to pay. Let's see, that we estimate in order to start off your escrow account. These are items that will go into escrow. So the homeowner's insurance premium actually, so it's a prepaid. So this would actually be paid right up front at closing. So this is to cover your first year. I don't know why it says 6 months on here, but we normally pay it every 12 months. So here in Illinois, we pay the homeowner's insurance for the full year. Obviously, wherever this is for, they must pay it only every 6 months. We don't do it that way. We pay for the full year, so it's taken care of right up front, and we pay that out of your escrow account. So you pay the first one at closing, and then you're going to see down here, we start to take a portion of the full premium that's due, and we have that in the escrow account, escrow payment. So then every month, we take off 1/12 of that premium, and we use that to hold to the side. So when the bill is due, you don't have to pay it. The lender pays it for you. That's for taxes as well as for insurance. All
Right.
right, let's scroll down.
Right. So that's important to know that your taxes and your insurance is actually included in your mortgage, especially when it's a FHA loan.
Yep, yep. FHA, you don't have a choice. Conventional, depending on how much money you put down, you can have an option for, what's actually escrowed or not. You do, like if you put 20% down, then there is an option to, pay it yourself. But for FHA, you do not get that. They're gonna pay it, it's gonna be an escrow, and you have no say so in it. Then
Hmm.
these are just, more title fees. That's the owner's title policy. It is an optional thing, but actually for the state of Illinois, the seller covers that anyway. That really becomes a seller's cost. They cover the owner's title, so there's no sense in not getting it. And then we're gonna go through now to figure out what the estimate for the cash to close is. I think, yeah, they come up on there. Okay. So this is your loan estimate. So this is showing deposit this probably was their earnest money. They put down $10,000 initially. They had some money, huh? And this is an assessment of what their down payment should be. And then this is what the closing costs are. So that's how they come up with the number here. They add this together, they subtract that, and then you got the 16 left over. So it's 26,054. And then obviously they took off the 10 that was already put down because you see it's a minus sign in front of it. That means they already gave it. So the cash to close, they estimated 16,054. So let's
Right.
scroll down here.
So, would you say this was 3 point? This isn't a FHA loan, so it's not 3.5% down in this case. Whereas
No.
maybe it would be less if it was a FHA loan. So because
Yes.
the cash to close was or what?
16 grand. Yeah, it
So
was the 16 grand, 16,054. But keep in mind, this is also a loan estimate. We haven't got to the closing disclosure yet. I'm comparing and contrasting the difference between the two. So now it's just going to be a few small differences between a loan estimate and the closing disclosure. So we're almost at that. I'm going to skip
right,
this part
right.
because
So
that's not
I
going
guess
to
I just didn't want to scare people like 16,000 for the down payment.
take
Right. So if it was
Right.
say for instance, it was a FHA person, the 3.5% down would have been like about $5,600. I only did it on 160,000.
Right. Yeah, that's about right. That's pretty
Mm-hmm.
close. But yeah, as you can see, obviously with this one, the sales price was the 180 and the loan amount was 162. So that meant that for whatever reason, they agreed to put down 18,000. So they actually put down 10%
Yeah.
for this one. So
Mm-hmm.
that is a difference. And as you can see, that is going to make the difference in there because even if you go back up here, that makes the difference when it calculates the cash to close. That makes a difference because the 8,000 is the closing cost, but then the down payment is 18,000. So 18 and 8 is 26. So 26 minus the 10, that's how you get 16,000 left. But it's only that much because they agreed to put down 10%
Yeah.
in
Yeah.
this example. So let's go to the closing disclosure and see how that falls out as far as the full amount that they actually end up bringing to closing. So you can already see it's less because here on this one at the closing disclosure is 14,147 instead of the 16,054, whatever it was we had on the previous page. So there's already a difference. So one of the differences, I'm sure, see what I told you? The appraisal fee. It's not
Mhm.
there. So remember we had an amount in here and that was being charged to the buyer. But now obviously that's already been paid outside of closing. It's already done. So they moved it from here where it was in this where it says borrower paid. It's not in borrower paid anymore. Same thing with this. The credit report fee, it was paid before closing. That's the same thing I do. I have you
Mhm.
guys pay it right up front, so it's already done. It ends up coming off and being deducted. Now I don't know if they have the same thing on here or now this one is a little bit more detailed. So I do want to go over a couple of things. So all of these are pretty much the same as what we saw in the loan estimate. That doesn't change. The title fees are what the title fees are. County fees are what the county fees are. We did the escrow and the prepaids. So all of that stuff is there. They did change it though on this one. I noticed they put 12 months instead of 6, which is what we wanted. We wanted to pay the full year up front. So we got that part taken care of. Now let's go down here and see. Oh, they must have a homeowners association because we got HOA processing fee. Now these are fees that have nothing to do with us as a lender or the title company. These again are third party fees. So this is something to keep in mind if you buy like, a condominium, something that has a homeowners association, they can have their own fees that they would be assessing you at closing. It doesn't have anything to do with us, but if that's what you choose and that's what they have you to pay, then we have to put that onto the closing disclosure. This breaks down what the real estate commission is. So no secrets here. People sometimes try to say, oh, well, I didn't know this, I didn't know. It's all in writing. It's all in writing. Every number, we have to count for every number that has anything to do with this transaction. So it's all going to be in writing. Your origination charges are in writing. The commission fees for the realtors on both sides is all in writing. Everything is there. So here, let me see if we got them. Okay, they do. Well, they got the HOA dues. Do we have any credits? We should have some credits, right? Ooh, I can't read that. Lord Jesus. So this is what we normally get here in the state of Illinois because we do pay taxes in arrearage. So here it's not a bunch. It looks only like $365.04, but it's really for taxes. So like we pay county taxes, so for Cook County, DuPage County, Will County, wherever you might be buying, the seller of the house for the time that they lived in it, they have to pay those taxes. So taxes are paid a year off. So right now, 2022, we're paying taxes for 2021. Obviously, you didn't live in the building in 2021, so the seller owes for those taxes and they have to pay them. So usually in this segment right here, you actually are going to see a higher number because you're going to see whatever the amount of taxes that were due for 2021, they'll come up here and it's going to be a credit for you. So it's something they deduct. And you also had a seller credit too. I see a $2,500 credit right here. That came up as well. So it did make a change in the total amount that was due at closing to 14,147. Now, typically, again, like Dion brought up a really, really good point, which is that for an FHA transactions, which is what we normally do, we do more FHA than anything. It makes more sense for a lot of people, even if your credit is better. Sometimes it makes more sense because it allows you to buy more because the ratios, I'm able to do more with the ratios. I have more room. So keeping stuff like that in mind, your actual cost, like if we were doing this for an FHA loan, you're not putting 10% down. And because you're not putting 10% down, that extra, like let's just say $10,000 that was part of the down payment, that would not be part of what you would be bringing to closing. So like on this example, let's just do a real round estimate and say instead of 14,147, yours might be more like 4,000 or 5,000 as far as what you bring to closing.
Right. And the kind of the point of this exercise, because we're kind of close to our time.
Yeah.
Oh, sorry. Okay.
Okay, thank you.
Issues, right? So is to show you that there's 3.5% that's your down payment, and then there's some closing fees, but a lot of that is paid kind of upfront. So so that's a lot of information. Yeah, it was. Right. So a lot of that was paid up front. So then at that point, when you get to the closing, it does decrease.
Yeah, the numbers go down.
There's taxes that are paid by the seller that gives you a credit towards your closing. Maybe we negotiated some closing credits too, because we are going back towards that time where we can ask. So there's a lot of different things that we can do in order to help decrease the amount that you have to bring to closing. A lot of people are lately, one of the reasons why we did this is because so we get a lot of people say, oh, I don't have to bring any money. My friend didn't pay anything for closing costs, right? And so, I don't know about you guys. I don't know. But when you're asking, probably me, and maybe it's me, maybe it's just me, but somebody's asking, or I'm telling you my personal business, I might not tell you that I spent $20,000. I might say, girl, I got a good deal, right?
Right.
Like, oh, I didn't pay that much.
Right.
No, and I did pay. And so that's everybody's like, oh, there's this thing about there's no money down. My friend just bought a house with no money down. No,
Mhm.
everybody has to have some skin in the game. Like they're not giving away houses like that. That's
Right.
probably why we the foreclosures that were up in 2009
Yeah.
were probably a part of some of those different schemes and things that people were doing in order to giving a lot of people houses that they couldn't afford. So there's a
Yep.
lot of rules and regulations that were put in place to kind of prevent all that. So you got to put some skin in the game. And
Got
don't
to.
listen to your friend that told you I didn't pay that much, girl. No, I didn't pay that much. I didn't buy put no money down. No, you put
Yeah,
seven thousand
it
down.
came from somewhere.
Right.
Somebody put it down.
Right. Right. You at least put $7,000 down. Right. Like you
Right.
right.
Because
So
that's going to be a FHA requirement. There's a minimum required investment. And if you're doing an FHA loan, then you have to be doing it in accordance with the guidelines and the regulations. Either
right,
that or you doing some shady stuff.
right. So we're here, we're just trying to maybe defunct that myth of there's no money. I didn't put no money down when they say on TV, no money down, you could get a house. You know, when you go to get the car and they tell you no money down, you still
Mhm.
end up walking out of there. How did I thought I came for no money down car.
Remember what grandma said, if it sounds too good to be true,
Right.
it is.
Right. Exactly. So we just kind of wanted to show some numbers just to let
Yeah.
you know, it does cost a little to participate in the home purchase of a home. So,
Yep. Yes, it
and
does.
from this beginning of the year, this year, we've always talked about prepare, right? Plan and
Mhm.
save. And so there's a lot of different ways that you can save your money or get money for your down payment towards your home. You should look into it. Look into your 401k. Look,
Yeah.
save some of your money. At your mom, dad may have some money that they want to give you towards your closing, so they could give you a gift. So there
Mhm.
is some different ways in order to um, purchase a home with money that you do need.
And if you need some advice, guidance, some any kind of input on things to look at ways to do that, call us. That's what we're here for.
Yeah.
So if we've done this long enough and with enough people that we can pretty much navigate, pretty seamlessly through a transaction. So just give us a call. Let us know what your questions are. Money questions you probably want to direct toward me because I'm
Yes.
the money lady.
Yes. You could call me to say hi
Right.
when you want to talk about money. So you can always give me a call and I'll say, hold on, okay, we'll talk to Lisa about that.
Right, right.
But if you want to talk about a house and purchasing a house and you've already been pre-approved or planning or selling your house or planning on purchasing the house, anything that has to do with the purchase of the house, not the money part, give me a call. So that's my number there. I'd love to talk to you, love to help you with purchasing a home, multi-unit, mixed unit, everything.
Whatever
Investment
you
property.
need. We can
So
definitely help.
yeah,
Thank you, everybody.
thank you for joining us. It's so happy to be here. Bye.
Have a good night.